I'm Zach Miller, Editor-in-Chief of Tearsheet. The following was produced by Tearsheet Studios. We worked with fintech software provider Autobooks to create a 4-part podcast series on the evolution of business banking and how banks can better service SMBs through a changing mindset, partnerships, and integrations. It's really hard running a small business. Owners have to wear many hats. Frequently, they're taking care of sales, operations, customer service, and finance, all at the same time. You know the expression around kids, that it takes a village to raise them? Well, for a small business, it takes an ecosystem to support them. And that ecosystem should involve their bank. That's because the most important thing to an SMB is cash flow. If cash is king, cash flow is the oxygen SMBs breathe. Without it, they struggle to survive. Banks play a key role here.
Yeah, so I think the opportunity for small and micro is help managing cash flow. I think we do a lot of work around cash flow. We've got a team that has really gone deep into this category, and we employ a framework called jobs to be done. So we really get at the root of what is the pain, what is the problem small businesses are trying to solve.
That's Steve Robert, co-founder of Autobooks, a software provider in Detroit with an office in Austin. Autobooks provides software to banks to help them serve their SMB customers better. Even if a small business doesn't know the right terminology to use, they know deeply that they've got bills to pay and payroll to make every month. Cash is top of mind.
What we kept coming back to time and time again was cash flow. Now, they don't use that term per se, but the idea of helping them get paid, helping them compress sales cycles, helping them offer more convenient ways to accept payment was very much still a problem. And it was funny because, when we were raising money in our Series A and even later into Series B, the question, well, don't all small businesses just use PayPal or Square or Stripe? And the truth is a lot do. And those that are progressive and innovative or technically savvy are already comfortable using those tools.
But for many businesses, they're not yet comfortable using modern technology. And in a way, they're in no man's land when it comes to banking. They're too small to get the attention of commercial banks. And they need more help than just a regular consumer client does. They're stuck in a problem that they need help solving.
There's a huge segment of the population that are still maybe second generation family businesses, still relying on the cab of their pickup truck as the office for the day, and there's still a huge dependency on cash and checks. So they really are looking for ways to help them get paid, bringing money into their account, and that doesn't necessarily mean that the services that the bank has offered in the past are the right services. Things like ACH, batch management, wire services, FX. Those aren't the services that the small and micro category needs as much as maybe the mid-market and larger enterprises need. So it's an opportunity to kind of reimagine the services that small businesses need, and ideally help them get them to a point that they can get more value, out of the existing relationship they have. And put another way, we've often used this term that small businesses are stuck. Retail is too small, commercial and corporate banking is too large, and that's unfortunately forced them to oftentimes have to leave the financial institution to go get line of business services.
Finding our way out of this jam, being able to help small businesses with their cash flow needs, probably can use going to the root of the issue and looking at how we got to this place.
That's a fascinating question, and I'm sure there's going to be an academic debate in the years to come around this, because I think what we found in just a few short years is how consistent people recognize this problem. It's underserved. Small businesses have historically not been given the tools they need, and from the very place that you would think is most appropriate to provide value, from the financial institution. And I think if you unpack that just a little bit, you'll kind of quickly recognize that banking is largely doing what it was designed to do. I mean, you know the industry, that the ACH system, and at least in my opinion, isn't broken. Again, it was designed to do exactly what it's doing today. It just so happens that when financial institutions started hitting scale, a lot of the energy and focus was on geography, in serving their local communities. And then, with the advent of digital and technology, that allowed, services to expand. But in that process, we may have lost a little bit of that personal service. A lot of the emphasis early on was on cost saving.
If banks are doing what they were designed to do, consumer companies like Amazon have raised the bar. People expect better service and experiences from their providers. SMBs want more help and support from their banks.
consumerization of people's personal lives being inundated with technology has now found its way into small business, and people are expecting a lot more out of the bank. So it's not that they were neglectful intentionally. It was just, the state of change and the pace of progress in the last 5 or 10 years of banking has just been unprecedented. So it's a fantastic time to be in the space. Payments, as we know, has seen huge progress, and I think there's still a lot of work that can be done as people now are recognizing that small businesses aren't the historical challenge that banks, I think, saw them as, meaning a charity case for helping a local business because they were a longtime customer, or they needed to do a loan to help support a community or philanthropic need. I think banks are increasingly recognizing that small businesses can be profitable. It's just the way we deliver services have to be a little more efficient. We have to reduce the acquisition costs and deliver valuable services so that we can do it profitably at scale.
So, banks are changing. 2020 and the COVID-19 pandemic have accelerated the move toward digital for many financial institutions. It also hurt SMBs that looked to banks for help, but some rose to meet the challenge.
So I think we see some examples of great ones. And I mean, we saw a lot of, tremendous heroic efforts, in the last 12 months. You saw, depending on your source of information, 3 years of banking progress done in 3 months. And, I've heard some people say even more than that. So, I mean, the bank's response to PPP was amazing. And I think we've come as an industry to recognize we don't have to rely on the status quo. The way we've always done things, the heavy paper-based, the manual, the lengthy, and we saw, I'm sure, in each of our businesses, the digitization, the remote, tools and capabilities, and I think that was something that we really saw front and center during COVID. Was banks that had already made investments in digital were more and better positioned to accelerate through. So we were tracking very, very granularly the small business experiences during COVID, and we were waiting for the bottom to fall out. We saw it happen right in front of our eyes with folks that had point of sale dependencies, retail, customer, in-person transactions. But what we also saw was those that were already embracing digital invoicing and online payment tools and the internet banking experience itself were generally more insulated from some of those challenges because they were finding ways to still get paid and deliver services. So I think investments in digital is a big one. We've seen that, coming for a little while, but this, I think, just further accelerated it.
But even with these investments, some banks serving SMBs are still early on in their digital transformations. They lack basic functionality, and that impacts their customers.
And yet I think there's more that needs to be done. There's still generally a lack of digital account opening, for businesses to enroll in online services. And again, I think there's just a variety of things that can be done to take the investments that have been made even further. And if not, there's a rise, as you sure know, of the neobanks and challenger banks increasingly looking to disintermediate financial institutions if they don't provide these very compelling products and services that customers are asking for.
Some banks, though, get it. Challenger banks, for example, are using technology to address SMB needs around cash flow.
The digital banks are doing quite well. There's banks like Radius Bank here domestically, and NBKC are examples where they've embraced technology. They've been growing a non physical presence and been quite successful, attracting we'll call this new era of digital businesses. But I think even some of the larger financial institutions that have increasing resources are also doing some compelling things. Just to pick one, Chase has recently announced a product called Quick Accept. And that, I think, is important on a variety of levels. It really puts a stake in the ground around making payments for businesses a first-class citizen, which is making it easier for their small businesses to get paid and bring money into the account, where so much in banking historically has been focused on moving money out, wires and ACH batch or bill pay from a payables point of view. So I think an example of that really helps. Chase, I believe, has several million users able to now, as an extension of their digital banking app, be able to start accepting payments. And we expect that to be a standard that many other financial institutions, in the future begin to offer their customers.
For its part, Autobooks works with financial institutions to offer their SMB customers digital services. With Autobooks, banks can offer SMBs help with cash flow and invoicing.
It really starts with the experience. So, as you know, the small business market is very fragmented, and our vantage on it is banks have a lot of small business depository accounts, but they've historically kind of struggled because small businesses are too large for a retail or consumer account, but in many cases too small for that treasury cash management service that our large, upmarket or mid-market financial institutions provide their larger customers. And what Autobooks does, we try to take the treasury and cash management services and bring it down market. So things like invoicing and payment, as I mentioned, just providing a very organic on-ramp so that a small business that might have just opened up their first business checking account and they maybe just closed their first sale, they need help. They need to know where to go. And in the industry historically have attempted to sell them treasury products, so mids and tids and lids and jargon that the industry understands. But a lot of small businesses, finance isn't their number one priority. So Autobooks really tries to lower the barrier of entry, allow small businesses, family businesses, lifestyle businesses to gain access to powerful tools to help them run their business. And again, something just as simple as giving them the ability to send an electronic invoice directly from within the bank's website. They don't have to go download software. They don't have to go sign up for third-party services. And then those invoices can be paid very quickly and easily online from their customers. And keep in mind, these are oftentimes small businesses that in many cases haven't historically offered online payments or even the ability to get paid by a credit card. So as you can imagine, in the last year with COVID, this has been a huge gain in the sense for banks being able to offer digital services for small businesses who are increasingly looking for ways to get paid online and shift from offline paper checks, cash into an online digital banking experience.
Getting paid is a top priority because it's a central part of the cash cycle. Banks' best customers direct deposit their paychecks into their bank accounts. Banks can offer similar functionality to businesses and their customers.
For us, it really starts with the invoice. We're all aware of the ability inside a bank to transfer funds and pay a bill. But the thing I think that's been historically missing in the area that we've seen the most significant growth is the ability for small businesses to accept online payments. So we're all familiar with how that can be done outside of banking, but at the end of the day, the bank still has these tremendous relationships. They've got the deposit and they've got an active customer base. So the features that they're increasingly missing historically that more innovative banks are beginning to offer center around that, the ability to get paid online. So that starts many times with a digital invoice. Other things that they're increasingly leveraging is the ability to accept a payment inside of the banking app. So imagine you're in the field and somebody hands you a card. You can enter that information very quickly. And the power here is that it's deposited directly into the small business's bank account. So it's not in a held away account. It's not in a non-bank provider that you've got to transfer and then later reconcile. But the convenience and simplicity of having it embedded inside of the banking application, managing your customers, sending invoices, processing payments, and using online payment forms to get paid when an invoice may not make sense. So in summary, small businesses love it because it enables them to accept online payments from customers when those services were not widely offered by financial institutions previously. And conversely, financial institutions love it because it helps them generate income and helps lock in that customer deposit, that relationship, and that primacy.
In addition to banks like NBKC and Radius, Autobooks works with TD Bank, one of the largest banks in the U.S., to provide online accounting tools to its SMB clients.
To be more specific on we'll say a traditional bank that's got a sizable footprint. Some of our financial institutions, TD Bank was pretty provocative, running an RFP with us a few years ago that we were lucky enough to win around an integrated accounting experience. So TD Online Accounting is a product. They're the first, large top 10 bank in the country to offer, internet based banking based receivables and payables and accounting, all provided as an extension of the bank's checking account. So we have several examples I think that are starting to challenge the status quo in terms of what are the experiences and services small businesses are looking for, and how can the bank increasingly become that center for their customers' financial lives.
SMBs run the gamut in terms of their needs. So banks' SMB products also do. Some go much deeper than others. There's a growing focus on helping business customers around their payment cycles.
The area that's most exciting is you'll probably see a consistent theme is receivables. The ability to offer, again, invoicing is really tip of the spear, because in many cases, small businesses can't run or even walk if they're not yet crawling. And so many small businesses still are sitting at the kitchen table, on a Saturday night, trying to keep their arms around their business and understand their cash flow and reconcile. Even if that just means, looking at aging receivables or understanding who still owes them money. It doesn't necessarily have to mean they're running an income statement and balance sheet at the end of the month. But if they do have tools that can increasingly automate that, give them the benefit of a fiscal discipline, with respect to understanding budget to actual and some basic, financial tenets when running their business, they're that much more likely to succeed. They're that much more likely to be eligible, for working capital loans from their financial institution, or have, the hygiene in place to be able to manage their growth and related expenses. So, certainly the receivables is a piece that helps businesses increase cash flow. That's the lifeline.
Helping SMBs wrap their hands around their finances means increasing their chances of survival. Little changes can have big impacts.
Having an ability to reduce your day sales outstanding, give your customers more convenient ways to pay you, it generally translates to a higher customer satisfaction, because you can, get paid in ways that consumers increasingly want to pay. And I think that's an important byline here, is that even though small businesses haven't historically accepted, online credit cards, customers do want to pay. They want the loyalty, they want the rewards, they want the points. So I think as banks can increasingly step in to provide services for small businesses to get paid the way their customers want to pay them, and then have the funds actually arrive in their business checking account without being held or having, some of the challenges associated with payment systems outside of the bank, give them confidence, give them the ability to receive support, which is, again, a really unique competitive advantage I think banks have, is you can walk into a branch and talk to somebody. You can call an 800 number and get service. And when you tie those things together, I think you've got a formula for some, really compelling capabilities to, be able to serve the next generation of customers.
SMBs' needs are changing, but so are the institutions that serve them. There's a growing openness at many financial institutions to partner, to work and integrate with third parties to offer their customers the tools they need.
So I think we're starting to see the beginning of it. Thankfully, we're certainly participating in a lot more conversations around, what are these needs and where do we expect them, to go? And digital, again, is already here in many respects, and we expect to see significant more investments in that. Lots of banks through consolidation and M&A are reevaluating their platforms. Are they aligned with the right digital platform? Is it flexible and scalable, and will it continue to support their future needs? And how does it play nice with third parties? Is it pluggable or extensible so that a company like Autobooks can be integrated and deliver a compelling experience inside of internet banking to help the bank leverage innovation without some of the historical challenges associated to such integrations. And I still think deposits has a big role to play, helping, again, small businesses accept online payments for their customers as a default. And maybe to put it another way, the ability to help small businesses build, what is essentially a direct deposit relationship, much like what consumers and retail customers have had inside of banking, as those small businesses are sending invoices and getting reoccurring payments, and their customers to pay them, directly into their bank account, is a really sticky and really high value relationship for the financial institution.
Helping SMBs can also be good business. Technology integrations with fintechs can help to lower costs in serving small business customers.
I think what we'll likely see in the years to come is invoicing and payments to be just as ubiquitous as what we saw bill pay or remote deposit capture to be, because it just, in our opinion, makes sense to have both the receivables and the payables under one roof. And ideally, the accounting allows the integrity to be very high, such that the bank can better understand their customer, make even the smallest customer increasingly profitable, and of course, the relationship and satisfaction small businesses have with their financial institution to provide contextual, digital, and innovative services, we think is a powerful formula for the future.
I hope you enjoyed my conversation with Autobooks Steve Robert. This is part 1 in a 4-part series on what small businesses really need from their banks.